Can you get equity release without a job? Yes, you can. But there's some financial aspects to take into consideration. Equity release offers a unique way for homeowners to tap into their property's value, freeing up a cash lump sum. It's different from your typical equity release mortgage. While standard mortgages require those monthly payments, equity release just waits in the background. The payment only comes due when the last homeowner either sells the property, goes into long-term care, or passes away. This kind of flexibility makes it super handy when you're older and you're near retirement, or maybe if you've stopped working. If you're thinking, if I don't need a job, then what do they base it on? Well, the amount you can unlock is primarily determined by the value of your property. The age of the youngest homeowner, you've got to be at least 55. So it's all about your home's value and your age. For example, the loan to value, LTV for short, the ratio increases as the youngest homeowner ages, allowing for more cash to be accessed. Remember though, a higher LTV might attract a higher interest rate. Apart from that, lenders also consider your property type. You'll generally release more from a house and a flat. Your country. Most parts of the UK enjoy a wide range of equity release products, but Northern Ireland has some restrictions. Your postcode. This helps lenders gauge how much they're willing to lend and ascertain your eligibility. Your medical history. Having certain health conditions could be an advantage, allowing you to access more cash at lower interest rates. So, should you jump into equity release if you're not working? Well, it's not a one-size-fits-all answer. If you're on benefits like universal credit or pension credit, tapping into equity release can affect your entitlements. The money you get is seen as a loan and not income, but if it sits in your bank for too long, it might be treated as savings, affecting those mean-tested benefits. Make a note of drawdown equity release. Now, this plan lets you take a lump sum and place it in a reserve, so you're only charged for interest when you draw from it, not on the entire reserve. And the best part, in most cases, it won't affect your benefits. Some key advantages of going for equity release when you're jobless are gaining access to funds, especially when a regular mortgage or a secured loan might be out of reach. Clearing off that hefty mortgage, making life a bit easier. Using drawdown plans to ensure a steady income flow, especially handy during job searches or post-retirement. But there are risks. The most apparent risk with equity release, especially if jobless, is its impacts on your benefits. Also, equity release has lasting implications on your estate and potential inheritance. With some plans extending over years, interest can pile up, which affects the overall cost. Make sure you keep this in perspective and don't hesitate to seek advice. If you're on the fence, chat with an equity release advisor. They can offer guidance on managing your funds best and explain concepts like lifetime mortgage and how it differs from regular equity release. If you're interested in seeing if you could get a home equity loan, then simply click the link below the video and fill out the short form. It contains some short questions like your date of birth and the property value, and then it'll give you access to quotes tailored to your circumstance. It's totally free to fill out, and of course, it won't affect your credit score.